Stay tuned as I show you how two of our students were able to successfully trade the same setup and bull run on Woolworths, an Australian stock on the ASX, while managing their stop loss and their exits in two completely different ways, purely based on their time restraints. Just our disclaimer quickly, everything I talk about today is based around education only. So this is Woolworths. It's a daily bar chart. I've got some quarterly and monthly turns signified with these little squares here. Okay. A couple of our students, this is their market. They just love this stock and they've been trading this short for a good while now, a couple of years, but they had their eye on this area here down in October of last year for a possible turn and then a run up where they could take some long trades for a change. Okay, so I'll just show you their setup. So we've got student A, who's a bit of a FIFO worker. He hasn't got time to stare at the screen. He's in and out of home, etc. So he likes his trades to be a bit more long term. He uses monthly turns. He still enters using daily bars. His stop loss will be 1 cent behind that turn, and then he may manage it by trailing 1 cent behind each monthly turn as it comes along, and he's looking for a big range and for it to repeat by 150%. And we've got student B, who's a sort of stay-at-home mum looking after the kids, so obviously very busy, but when they're at school and daycare, etc., she's got time to do her analysis and her trading work. So she uses weekly turns. She's in the market a bit more often, still using daily bars, and then she's got a 2 cents stop loss behind the entry bar, and she'll manage that by trailing 15 cents behind each weekly turn. And that's obviously been back tested by herself on this market. And that's what our students learn to do with the Active Trader program is back test their particular markets and fit their trading plan around the market that they're going to trade. So not too many surprises for our students along the way. And she's looking for smaller ranges, but a 200% repeat. So we'll head out there into profit source. And here's our low in October that they were looking at. And our student A, our FIFO worker, entered his first trade down here. And I'll just run you through how the market played out. And a nice push away from the low initially. All right. And he's happy just to stay down here with his stop loss. Out of the way, he's gone for a few weeks at a time. He hasn't got time to keep checking every morning, every evening. But when he does check, he's looking out for potential moments to enter the market again. He's found another one here, which turns out to be a monthly turn again. And off the market goes beyond there. What he will do at that point is now move his stop loss for trade number 1 up under turn number 2, if you like. So he's got 2 lots of stop losses now under this monthly turn here. And as you can see, the market's moving upwards, and then we get a huge gap up and a real strong bar upwards from there. And our students know all about gaps and their strength. And both of his trades hit their profit target during this day here. Okay, so that was a good day for him. We'll head back inside and I'll just show you some details of his trading. That was his first trade there, stop loss underneath that entry there in October. And trade 1 had a reward to risk ratio of 18-1. All right. And that's the beauty of having those long-term trades. You get a nice big reward, and if you can get in really close, you can keep your risk down. I've put a $5,000 account in for both of the students. I don't know what the size of their account is. I just tend to use $5,000 as a rule. Okay, we never risk more than 5% on our trades, which would have been 250, but we got our reward instead, which was $4,500, and that took 92 trading days. Now, that might be a problem for you if you're intraday trading, etc., but for someone who's really busy, he can let that roll and let that play out. This was his second trade here. There's a monthly turn. This outside bar has allowed him to jump in there. He's got his profit target up the top, of course. The reward's a little smaller, the risk about the same. He's got an 11 to 1 reward to risk ratio there. I've just kept the account the same as an example, and that would end up at $2,750 reward for him and only take 34 trading days. Brilliant. Okay, and as you can see, that day there, both his targets got hit. Both his trades would have been exited at that point. Stop losses that were under here would now be closed as the trades was closed for a profit. So here we have student A and his two trades, his long-term trades, and they take a fair bit of time to play out. He's happy with that. Look at the reward to risk ratios. They're fantastic. And he's picked up in two trades, just over $7,000 for his troubles. So he's very happy with that, especially as he's very busy traveling around for work. And once you know what to look for and how to structure your trade properly, opportunities like this start appearing across many different markets for you. That repeatable approach to analysing and structuring trades is exactly what we teach you inside the Active Trader program. So to find out more, check the link below. So that is our trader number one. We'll head out into Profit Source and check in with trader number two. Now, although, obviously being a mum, she's very busy at times, but there are times during the day when the kids are at school, etc., where she can knuckle down and do some analysis. So she took this entry as well. Okay, and we'll just play through. She also took a second entry here at the breaking of these highs with this massive outside bar there. Okay, so she'll be entering in there, stop loss underneath. And I've just put for trade number one her target here, which was hit on this outside day. So that's good. First trade in the bank. Second trade, the target is up here, 29.30, and we'll just carry on. There's a little gap there after the outside bar, huge strength there. Now, another opportunity here, using this gap as support, okay, and the potential to enter the trade again, and off we go. So she's into trade number three. The target is up here. All right, and as you can see, she's taking more trades than our FIFO worker because she's able to. All right, but maybe she's not looking for such a long distance profit target and the trade to go on for too long. She's taken a fourth trade here. Okay, again, we've got another little gap there. She's taken a fourth trade in there. And unfortunately, this time, the trade has come down here and taken her out. So that trade would go down as a loss. All right, that's okay. We've got three good trades going on. We've actually hit the profit target during this sideways mess here of trade number two. So she's got two winning trades in the bag and a third one on the go, and this fourth one has stopped her out. But we've now entered a fifth trade here. So you can see the difference, whereas we went through to 6 months with our FIFO worker and he was happy to take two trades and sit there and let the market play out. with our mum here, she's happy to get in more often. They're using the same techniques that they learned from our active trader program, but they're just using them in different ways based on their lifestyle. And there you go. She is pushing on through here. Okay, so we'll just carry on. And down we come again, and another opportunity. Funny how there's always a gap and then an opportunity. We've got another gap here. Okay, so we're using that for trade number 6. All right, and you can see the profit targets up here. I'll just keep moving on. Another opportunity arising here, trade number 7 would be entered on that green bar there. And when we break the extreme of this low bar, and as you can see, these are all weekly turns, okay, where we're trying to enter and store in our stop loss underneath, and our stop loss of these other trades will be trailing behind. I think 15 cents. She said she would keep her stop loss behind each weekly turn. So, now we're into trade 7, and there's that big bar that we saw earlier, and up it goes, and we've taken out 3, 4, or 4 was the loss, 3, 5, and 6 all in one day there. What a great day that would have been for everyone. Okay, next day takes out trade number 7. So all of these trades now are done. 6 gains, 1 loss. Happy days. She's been very busy. And then we've got a trade number 8. Okay, and I just want to show you where we are now. Okay, so trade 8 is still live. That's basically why I've given it a yellow sort of square there. Okay, trade 8, she's taken, and it's still live. It's still live, so there are possibilities there. So we'll head inside. All right, so we'll have a quick look here at some details for student B, our mum trader. And here we go, back in October, our entry, our stop loss, our profit target, trade 2, the outside bar, trade 3 there. Okay, another outside bar, stop loss underneath. Okay, luckily a couple of cents underneath, so that's been some good back testing on her part there, where she knows to leave her stop loss a little lower than the entry bar because the market can travel sideways initially. There's trade 4, which didn't go so well. Trade 5, another outside bar. Bit of a theme occurring here. 6, a little gap into it, which makes the risk a little larger. Okay, but gaps in the direction of the trend is good for us. And then 7, possibly the best trade of all, because the next day we charge upwards to, I think, 2 days that trade took. And then trade 8 is the one that's still live. Okay, and the market is currently sort of hovering around there. This is the stats for trade 8 if it plays out. It's a nice 14-to-1 reward to risk ratio, which would bring in 3,500 if it occurs. Okay, and we don't know how long that is going to take. So there's her 8 trades there in the same space of time and the same market as our FIFO worker took 2 trades. Similar results, just different lifestyles leading into how they use David Bowden's techniques to suit their lifestyle or personality in any shape or form. Okay, so there's the results. Okay, we've got our profit targets down the side there. All right, and there's just our data there for the results. So as you can see, more trades, smaller wins each time, but they add up because there's more of them. 1 loss in the middle there. Okay, we only just risk 5% at the most each time. Okay, so you can see how the reward to risk ratio looks after you there. All right, so 6 wins, $9,000 coming in. A break even, that's just trade 8 because we don't know how that's going to play out. And 1 loss in the middle there, $250. Think this is a one-off, or we teach what works across most liquid markets, and you can learn how to achieve results like this for yourself in your markets inside our active trader program. See the link below to find out more. Thanks, guys. See you next week. Good luck.